Today, Front Page welcomes you with greetings and presents a discussion on the topic of First Republic plunges on report of buyers for new shares. First Republic Bank shares slumped to an all-time low on a report that advisors have lined up potential buyers of new stock as part of a rescue plan for the beleaguered lender. Advisors will try to persuade big U.S. banks, who have already bailed First Republic out once, to purchase bonds from the San Francisco-based company at above market rates for a total loss of a few $1 billion, less than the Federal Deposit Insurance Corp. fees associated with any First Republic failure, CNBC reported Wednesday. As part of that plan, the advisors have already lined up possible purchasers for new shares, CNBC said, citing sources it didn't identify. First Republic shares slid as much as 26% to $6.03, a record intraday low, Wednesday morning. They are down 95% this year. A representative for First Republic didn't immediately respond to a request for comment from Bloomberg News. Last month, First Republic staved off a potential collapse after a group of 11 bigger financial firms agreed to park a combined $30 billion in deposits with the lender. J.P. Morgan Chase and Company, Bank of America Corp., Citigroup Inc., and Wells Fargo and Company each contributed $5 billion of uninsured deposits each, while other banks deposited smaller amounts as part of a plan devised along with U.S. regulators. First Republic Bank to weigh up to $100 billion in asset sales. First Republic Bank is exploring divesting us $50 billion to $100 billion of long-dated securities and mortgages as part of a broader rescue plan, according to people with knowledge of the matter. Any sales would help reduce the bank's asset-liability mismatch, the people said, asking not to be identified, discussing confidential information. Potential buyers, including large U.S. banks, could potentially receive warrants or preferred equity as an incentive to buy assets above their market value. One of the people said, the lender is trying to shore up its balance sheet to avoid being seized by the Federal Deposit Insurance Corp. and clear the path for a possible capital raise, the person said. It may need the U.S. government to facilitate negotiations with some of the country's largest banks to stabilize the lender as it executes its turnaround, the person added. That would be a much cheaper alternative than a failure of the company. A spokesman for the San Francisco-based firm declined to comment. First Republic fell as much as 30% Tuesday after reporting a bigger than expected drop in deposits in the first quarter. The figure fell to $104.5 billion, well below the $137 billion average of analyst estimates compiled by Bloomberg. The total included a $30 billion infusion from 11 of the largest U.S. The bank on Monday confirmed it's exploring strategic options. We are working to restructure our balance sheet, Chief Financial Officer Neil Holland said in a statement. Thanks for listening and subscribe for more latest updates.